Now we head over to Zimbabwe, where James Wadi is standing by. He's the group economist at BancABC. A very good morning to you, James. Thank you so much for joining us on Open Exchange. Now, looking at economic activity over there in Zimbabwe, it has been pretty flat, really putting pressure on revenues. The government's saying that that $4 billion US revenue target looks like it won't be achievable.
Yes, true. I think we have started witnessing some kind of flatlining in terms of economic activity, and that is largely emanating from underperformance from one of the key sectors of the economy, which is agriculture, and the cumulative impact of the liquidity shortages that we are witnessing in the economy. As a result, we now expect a slower growth rate than the initially anticipated 9.4%. And given that economic activity is kind of slowing down, that will negatively impact on government's performance in terms of revenue collection. So yes, indeed, we are likely to miss our target of $4 billion that was announced in November last year.
You touched on the economic growth rate not getting to about 9.6%. What levels are you seeing economic growth rate coming in at, and which sectors are likely to drive that growth?
Yes, definitely. Like I said, I think agriculture is one of the key sectors that we think will, contribute negatively to economic growth. Again, I think one of the sectors that has been negatively affected by the liquidity issues is the manufacturing sector, where we think there can be sort of a downward revision in terms of its output performance for this year. So the cumulative impact of that would be a slower growth rate than 9.4%. But we still expect a strong growth from mining sector. Mm-hmm. For the first 4 or 5 months for the year, we have seen performance, particularly when you look at platinum, when you look at gold, we have seen sort of a robust increase in terms of production when you compare to the same period last year. So that gives us sort of one of the leading sectors that should continue to drive growth in the economy.
Looking at that number of 15.9%, with all that you've said, is that achievable?
Well, so far, when you look at the performance for various minerals, I think it's something that can be achieved. When you look at performance for gold, for instance, first 5 months performance this year compared to last year, you find out output has increased by over 25%. And when you look at platinum, output has increased by around 8%. And the nickel, again, output has increased by 10%. So yes, it's the 15.9% overall increase in mining should be sort of an achievable number.
Looking at tobacco sales faring better than last year, currently sitting at $484 million compared to $335 million in the same period last year. Your thoughts on the tobacco sales at this stage?
Yes, when you look at the tobacco, in terms of the production itself, it's basically flat. But what has happened here is there's been a strong positive price movement when you compare to last year. And that has really contributed to this significant inflows in terms of tobacco inflows, revenue coming from tobacco. So maybe something within the $500 million mark in terms of tobacco sales is something achievable for this year. So, but it seems like tobacco selling season is now coming to a close, and the current price has really come down from the previous $3.70 per kg to around $2.70 a kg.
Looking at the inflation environment, we've had inflation sitting at around 4% since March this year, but pressure seems to be coming through in the second half of the year, with inflation seen breaching that 5% target by year end.
True. As you know, Zimbabwe could not produce sufficient maize for its consumption, both for human and stock feeds. So what it says is, in the meantime, we are still leveraging on the current harvest that we just harvested. But as we go forward, I think that shortfall will become more apparent, and that shortfall will need to be bridged by import cover. And when you start to import maize, when you start to import our wheat, I think that would feed into inflation pressure through the food basket. And we should see a gradual rise of inflation from the current 4% years to above. Possibly we can even touch 5% and maybe break that marginally.